Welcome to Morningstar. Alibaba's restructuring plan is good news for the internet sector as a whole, as well as the China capital markets. Observers believe that the plan could rekindle the muted initial public offering landscape in Hong Kong as Alibaba is exploring multiple listings. So our senior equity analyst Chelsea Tam was on the investor call, and she's here with us today to tell us what she thinks. Hi, Chelsea. Can you tell us the key takeaways from the call?
Yeah, sure. I think the main takeaway is that Alibaba will sell some of the less strategic investments. So I think in this case, they are referring to the minority holdings in some of these equities or private companies. In addition to that, they mentioned that after the restructuring, there will be more options to return capital to shareholders. So we think that it could open the door to, for example, special dividend or for example, capital share buyback.
So before this event, Alibaba's rival JD.com has actually done a spin-off before. So are these cases similar?
Yeah, so JD.com has done, like for example, a JD Health spinoff and a JD Logistics spinoff. I think they will be similar in the sense that both JD.com and Alibaba Group, they will remain the holding companies with control over the subsidiaries. So I think that would be the main one, and they will also retain the most important e-commerce business in the holding companies.
Will the market welcome the changes at Alibaba? Are there challenges that the plan will bring about?
Yes, I think there's a concern that not all the synergies currently can be kept after the restructuring. So, for example, Ali Cloud provides its cloud services to different units in Alibaba. Previously, I think that they are one company, so they probably use transfer pricing. But then going forward, after the restructuring, they might have to provide it on a market pricing basis. So that means the cost for Ali Cloud could be higher for these companies. And also, it's not certain if all the business cooperations between all these units can be maintained at the same level compared to before, although this is something that the management would really want to do.
In terms of valuations, what adjustments will be made for Alibaba as a holding company?
So we maintain our fair value estimates of USD 177 dollars per ADS unchanged. This is derived using the DCF method. Morningstar uses DCF to derive the fair value estimates most of the time. But in this case, because of the restructuring, we also apply some of the part valuation as a check and as a reference. So if we use SOTP, then the value of the company would be around USD 172 per ADS. And we apply about 20% holding company discount for the five companies that will be spun out, hopefully. But I also note that there's a wide range in terms of the holding company discount globally. It can be teens, it can be more than 50%.
Right. So with this revamp, investors are also eager to know whether the suspended IPO of Alibaba's fintech affiliate company Ant Group could soon be rebooted.
Yeah, I think it will be rebooted. So I think Ant Group is undergoing restructuring. So it increased its capital base, for example, previously. And I think Tencent also mentioned that they think that regulatory environment has normalized. So I think it's just a matter of time. But I also want to note that the Alibaba restructuring is not really related to the Ant Group restructuring. So they are two different companies, and Ant Group is held by Alibaba, but only about 33% in terms of equity stake. So it's not a wholly owned subsidiary.
Wonderful. Thank you so much, Chelsea. For Morningstar, I'm Caitlin.